Hey guys, it is Mark Coe for the 19th of February. I wanted to take a look at euro dollar here. I know it's been something I've been talking about for a long time, but I want to kind of talk through and look how big this actually is in terms of what production it's produced for your P&L. So think about what it is I'm doing. I'm always trying to define a top edge and a bottom edge. And the reason I'm always defining a top and a bottom edge is because the top edge gives me an opportunity to take profit or sell short. Bottom edge gives me an opportunity to take profit on short trades or go long. What I've been working in euro dollar since the 30th of November is buy edge, bottom edge. And so this bottom edge is derived from prior activity down to a level and simply the inability for the market to press lower. A couple things I like to use in my analysis. Reversal counts, which means it's now a buy trade based on a longer term count. All of this is present, and you see what I have highlighted here in green. Now this is a weekly euro chart, and kind of to lay out what it is I'm doing. I am defining the spot that the market is unable to continue to press lower, much like I would define the spot that the market's unable to press higher after movement, and I'm really defining consolidation. And so you're able to do this on multiple time frames. So this is a big picture, something I talk about every Sunday night when I do our free session. But the good stuff, well, what's the good stuff that comes along with looking at this on a daily basis in our room, in our subscription area, is all the shorter term profits that are there when you see price trading down into your buy zone. So I want to show you this from the standpoint of trade back to November 30th, which is when we first look at it from the initiation of that buy count. I just want to walk you through a couple of trades here because I think you're going to be pretty impressed with what it's been able to do. So now this is the first point back. So I'm just going to show you real quick what it looks like. The buy zone is defined between 1270 to 13 and a quarter, right? So I'm just going to show you what this looks like. This is the zone, 1270 to 13 and a quarter. So basically, any trade that occurs within that zone should automatically be looked to be an area to buy. All right, so now what do we define on a shorter term? So I'm going to delete this so it doesn't mess up your vision here, but I'm going to show you what it's defined as on a short term. Again, same counts I was just looking at on the bigger picture are occurring on short-term trades. Now this is a 30-minute candle, so this is right up the shorter-term traders' alley, something that occurs and gets resolution a lot quicker. But the long trade is initiated in the zone with the buy count. So that means long trades initiated at 1284, and you can see I have the arrow drawn to it. And we're constantly looking for prior edges, hence why we're getting the prior spots where the market stops. So this is over 100 tick rotation, $1,000 profit on a standard lot. Again, all on the 28th of November. So now we just want to repeat this scenario every time we see, again, what are we looking for? The zone, 13 and a quarter down to 1270s, right? That's what we're looking for. 13 and a quarter down to 1270. So that is your highlighted area. And it's a great little exercise to think about how many trades are occurring within that. Buy trade, $1,000 rotation. Buy trade, rotation, $1,000. So you're talking $3,000 in the first week right there, right? And it repeats, and it repeats, and it repeats. Buy trade, 1320. Does not quite go $1,000, but it trades up about 600. Buy trade 1280s. 1280s trades $1,000 higher. Now you're up closer to $6,000. And again, repeats all the way. I mean, many times over. We've had a little bit of struggle in the last couple weeks down around 1250, but I want to show you today's opportunity, because today's was a really nice opportunity. Again, this thing goes buy trade earlier in the day and gets a nice rotation. So you can go through your own charts and watch how many times this is traded down into your 1270, 13 and a quarter area, all the way to, again, present day, February 19th, 1287. Right? So far the high in the day is 57. That's another $800. Guys, there's probably $10,000+ of profit in one standard contract in a 2-month period. Well, let's call it 2.5 months, late November to early February. $10,000 on one market by playing that level. And it's something you can repeat over and over throughout markets. How do you do it? You're defining your edges. You're defining top edge, bottom edge, and you're defining it on multiple time frames, working down into something that you will actually deal on in the shorter term, and then simply being able to act. And look what it does to your P&L. Forget all the trades that aren't working. Concentrate on this stuff that can actually pay you, and you're going to see a difference in your account. So just wanted to show you because euro has been really tight, but even with the tight market, it's been able to really pay dividends. So guys, keep up with it and keep doing the work, and let it really benefit your account. So for the 19th of February, hope you guys are having a good day, and we'll chat with you soon. Cheers.